It is another Thank God Friday to the start of the weekend. I am Melissa Enoch here at the FMBQ studios in Lagos.
And I am Grace Agbarago. It's the 17th of October. We hope you've all had a great week so far.
All right, let's tee off with your news now. The East Africa Capital Markets Conference has come to a close today. The Uganda Securities Exchange wraps up a day of insightful discussions on digital transformation and sustainable finance. Let's take a listen.
Private equity and venture capital investors need an avenue for exits. And there's no better place than to go to a willing buyer of over 10 million retail investors across the East African market. So who are investing into their very own companies. So we continue to foster and support that sort of activity. You'll be glad to know that some of our transactions have been equity, private equity, straight private equity, and from 2024 to date, we've almost doubled the transactions that we've closed and even increased the value. So as DFF, we do three key things: pipeline development, so supporting and identifying these businesses; investment readiness technical assistance, ensuring that they have the right governance, the right business models, and ensuring that they have the right transaction structures all the way to their deals. And also, we support transaction support to deal closure now, something which was different from the past. And then, even more importantly, we support market building. So we bring both the investors and the entrepreneurs into one room to identify what are some of the challenges that are being faced and how do we break those challenges. Private equity.
In Nigeria, a high-level forum on facilitating intra-African trade and investment was held today, organized by Woodhull Capital in partnership with PEBEC, the Nigeria Governors Forum, and OSAP-IC. The event explores how African and foreign investments can drive sustainable growth across the continent. Let's now take a listen.
What we're doing here today is to showcase the importance of investors. As an international company, which actually has offices in over 7 countries, we have offices in Nigeria, India, Philippines, Botswana, and the likes. What we've realized is that doing business in Nigeria, you have to work with the right partners and have the right understanding. And events like this is what actually encourages more investors like ourselves to come to Nigeria. So we would like to commend Woodhull Capital for all the hard work. Thank you very much. We are also the technical partners to the Nigerian Governors Forum, as was mentioned earlier. With the Nigerian Governors Forum, we helped them with the launch of the Investopedia. We were recently in New York for the launch, on the roadshow for the Investopedia after their top store in Algiers, and then New York was the next step. At New York, we were able to host several state governors, like the governor of Zamfara. A lot of states were represented. Zamfara State, Niger State, Lagos State, Cross River State, and a bunch of other states as well were also represented in the room. Kano State, where the Emir of Kano himself. And what we did there, we were able to let the international community see what these states have in store. And it actually shows that subnational investments is the way forward. When you invest through subnationals, you have direct access to the governors, who are the chief marketing officers of their states. And we think it's very important at Cavista that we support the Nigerian Governors Forum and to encourage this subnational approach to investment and boost investments in a more tangible and equitable.
At the plenary session of the 2025 World Bank IMF annual meetings, World Bank Group President AJ Banga and IMF Managing Director Kristalina Georgieva addressed delegates. They highlighted global priorities for inclusive growth, resilience, and sustainable development. Let's pay attention.
We are living through one of the most terrifically huge demographic shifts in human history. By 2050, more than 85% of the world's population will live in countries that we call developing today. In just the next 10 to 15 years, 1.2 billion young people will enter the workforce. The estimates we have are they'll be vying for about 400 billion jobs. That's a large gap. The numbers are the numbers. It's the magnitude that we're talking about. So let me express that urgency in a different way. 4 young people will step into the global workforce every second over the next decade. In the time it takes to finish my delivering these remarks, tens of thousands will cross that threshold, full of ambition, full of the desire for opportunity. The pace of population growth is the most staggering in Africa, which will be home to 1 in 4 people by 2050. Between now and then, estimates suggest Zambia will add 700,000 people every year. Mozambique's population will double, while Nigeria will swell by about 130 million people, firmly establishing itself as one of the most populous nations in the world. These young people, their energy, their ideas, they will define the next century.
Since we last met here in this big hall on October 25, 2024, uncertainty has shot up. Yet, global sentiment is holding. In other words, we have a mix of anxiety and resilience. Today, I would like to reflect on both. First, the anxiety. From technology to geopolitics to climate to trade, change is unsettling. The world trading systems that delivered so much for so many is being shaken to its core for many reasons, including because the playing field wasn't truly level and the people left behind received too little help in retooling for new and better jobs. We see assertive non-tariff measures ranging from import licensing, and Ajay talked about that, to export controls and port fees, with subsidy counts capturing only part of the picture.
In a press briefing at the World Bank IMF annual meetings, G20 finance ministers have adopted a new 5-year framework to boost growth and development in Africa. They also endorsed the first ever G20 declaration on debt sustainability, signaling stronger action on rising debt and capital costs. Let's now listen.
This framework strives to ensure consistent engagement by the G20 with key impediments to growth and development in Africa for the next 5 years. It complements existing G20 initiatives, such as the Compact with Africa. Ministers also signed up to the first ever G20 ministerial declaration on debt sustainability, which signals the intent of the G20 to do more to tackle unsustainable levels of debt along the rising cost of capital, particularly for African countries. The meeting delivered constructive discussions on the global economic outlook, the macroeconomic stability, the international financial architecture, and financial sector issues. The meeting also received an update on the work of the Africa Expert Panel. Further details on the discussions are recorded in the chair summary of the meeting, which is now available on the G20 website.
In other news, Al Salam Bank Sudan has reported strong third quarter 2025 results, with net income surging 321.4% to 1.16 billion Sudanese pounds from 275.28 million pounds a year earlier. Basic earnings per share from continuing operations rose to 9.57 pounds from 2.27 pounds in the same period last year. For the 9 months ended September 2025, net income stood at 11.52 billion Sudanese pounds, while earnings per share edged up to 95.01 Sudanese pounds. Finally, on News Now this Friday, Cameroon has appointed Bloomfield Investment Corporation, an Ivorian rating agency, to secure its first sovereign credit rating in local currency XAF. The move aims to boost Cameroon's position as in the regional debt markets and diversify its funding sources. Kelly Moore Kingsley, head of financial operations at the Treasury Directorate, said the local currency rating will help attract regional investors, strengthen economic ties, and provide a clearer assessment of the country's risk profile. I am Melissa Enoch, and that's it for News Now today, Friday. The show returns shortly with Grace at the FMDQ Archives Room for our markets rounds. Stick around. Welcome back to Money Moves. Let's now go over to Grace for today's markets updates. Hello there, Grace. What are the markets saying today?
Thank you, Melissa. Let's now track how the markets are wrapping up for the week, starting off with the equities. The Johannesburg Stock Exchange slipped 1.52%. The Zimbabwe Stock Exchange rose 1.26%. In West Africa, the BROVM edged up 0.09% to 333.23. And here in Nigeria, the NGX All-Share Index edged up 0.42%, while the markets in Cairo and Nairobi are closed. Let's do a quick round on some of the Pan-African currencies. The Naira weakened 0.56% to 1,472 Naira, 31 kobo per dollar, while the Rand edged up 0.69% to 17.39. The CFA franc eased 0.13%, and the Egyptian pound was little changed at 47.58. The Kenyan shilling inched lower to 129.20, and the Moroccan dirham strengthened 0.31% to 9.14. Let's switch into the commodities data deck, beginning with energy prices. Brent crude slipped 0.23% to $60.92 a barrel, while US WTI eased 0.21% to $57.36. Natural gas edged up 0.20% to $2.94, and RBOB gasoline gained 0.66% as of 13:22 GMT. Finally, two metals prices. Gold prices rose 0.30% to $4,317.50 an ounce, while copper declined 0.58% to $4.97 per pound. Platinum tumbled 5.52%, and aluminium slipped 0.35% as of 13:31 GMT. And that's our Money Moves markets for the week. Over to you, Melissa.
Thank you very much for those market updates. And that's it for this Friday's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching and do have a wonderful weekend.